Section 2, Stock Technical Indicators. This course has an educational and informational purpose and doesn't constitute any type of trading or investment advice. Please pause the video now to read the full course disclaimer. Okay, let's continue. Stock technical indicators are calculated by applying a certain formula to stock prices and volume data. They are used to alert on the need to study price action with greater detail, confirm other technical indicator signals, or predict future stock prices direction. They are either plotted on top of price bars as overlays or below as oscillators, and there are two main types: lagging and leading stock technical indicators. Great, so let's go back into our Python PyCharm IDE so that we can see what this section will contain. Excellent, so here we are back within our Python PyCharm IDE. If you have any questions about how we created the project you're looking at, how we created all these files right over here, how we proceed to do our packages downloading, importing, and then how to do our data downloading or data reading, please go back to section 1, Stock Technical Analysis Data Lecture, where all of that explained with greater detail. So, in this section we'll be working within simple moving average, then exponential moving average, next Bollinger Bands, next parabolic stop and reverse, next we'll be studying average directional movement index, next commodity channel index, then moving averages convergence divergence or MACD, next rate of change, next relative strength index, next stochastic oscillator, and we'll close with Williams percentage R. So going back into simple moving average. Within it, first we'll import our packages and then we'll perform our data reading as default. Next we'll be calculating a single simple moving average and do the corresponding chart together with the prices. Next we'll continue with exponential moving average. Again, we'll do the corresponding packages importing, data reading, and then we'll calculate two of them, short-term and longer-term one. And we'll do the corresponding charting with those prices. After that, we'll study Bollinger Bands. Within Bollinger Bands, we'll again do the corresponding packages importing, next data reading, and then we'll calculate Bollinger Bands, upper, middle, and lower, and do the corresponding chart. Next, it will be time to study our parabolic stop and reverse. Within parabolic stop and reverse, we'll do packages importing, data reading by default, and then we'll continue right here with the calculation of the corresponding technical indicator and do the corresponding chart. After we've finished with parabolic stop and reverse, we've already finished with the corresponding lagging type of indicators, and now will be time to study the leading type. For this, we'll begin with average directional movement index. Within our corresponding average directional movement index, we'll import packages, read data, and then we'll do the corresponding calculations of the average directional movement index, positive directional index, and negative directional index. We'll do the corresponding charting with those prices and below the corresponding oscillator. Next, we'll study the corresponding commodity channel index. Again, we'll do our packages importing, data reading by default, and then we'll proceed to do the calculation of the commodity channel index and then do the chart with those prices, and then again we'll have that secondary chart in which we'll see the oscillator. Next, it will be time to study moving averages convergence divergence or MACD. For this, we'll first do packages importing, data reading by default, and then we'll proceed to do the calculation of the MACD, its MACD EMA or signal, and then the corresponding MACD histogram. Then we'll do the chart of prices and below the corresponding oscillator. Next, it will be time to study the rate of change. Here, we'll do packages importing, data reading, and after that, we'll do the calculation of that rate of change and do the charting again with the corresponding prices and the corresponding oscillator below. Next, it will be time to study relative strength index. Here, we'll perform our packages importing, then our data reading by default, calculation of relative strength index, and then do the charting of prices and oscillator. Next, we'll continue with stochastic oscillator, packages importing, data reading by default, and then we'll continue with the corresponding calculation of the slow K and slow D, which are the components of this stochastic oscillator, and we'll continue to do the charting with the corresponding oscillators below. And finally, we'll study Williams percentage R. Here, we again do packages importing, data reading by default, and then we'll continue to do the corresponding calculation of Williams percentage R, technical indicator, and do the charting with the prices and the corresponding oscillator below. Once we've finished with our corresponding technical indicators, it will be time to continue by studying how trading signals are generated with them. But before going there, let's continue with the next of our technical indicators, which is the first of our lagging ones, through our simple moving average, which is going to be our following objective.